Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs, at least the ones that I follow. I'm going to give you my financial opinions. And if you guys want to see how I'm positioning for this commodity bull market, you can check me out at finding-value.com, join our community, and you can attend our question and answer sessions on the weekends. And you can also check out my midweek updates that I do on the companies that I like and go through individual companies and the charts that I'm seeing and why I like or dislike certain companies. All right, so let's dive in here. Let's take a look and see what's going on. This is the dollar. Again, dollars are very highly correlated to what yields do. Monetary tightness means stronger dollar, or I should say less liquidity, more liquidity, or increasing interest or decreasing interest rates, weaker dollar generally. So monetary tightness equals dollar weakness or strength. Right now we are coming into what looks to be a good resistance level. You can see all these wicks at the top there. That is where buyers have come up and sellers have basically come into a selling wall. And that's where that wall is. Sell off, sell off, sell off, sell off, sell off, all these days. So are we going to head lower here? Are we going to head higher? I think that's highly going to depend on the interest rates. So if we go to the interest rates, this is the short end of the curve, the 2-year yield at least. And there's no distinct way that this is necessarily going to go yet. It hasn't determined where it wants to go. We've got nice, good selling pressure here. We've got a pretty good bounce on that candlestick there, and we're just sitting there. I think this can go either way. I've got this drawn out where we've got like a shoulder head shoulder potential where this goes lower, but I'm not exactly sure that's going to be the case, even though I've drawn that in there and it's the most obvious pattern. This here is a bullish engulfing with this green candlestick. It comes up and there isn't much selling pressure in these 2 days. It's hanging out like it wants to go higher. The potential is there to go higher. So again, I'm not exactly sure which direction this thing goes in the short term here. No one knows the future, but the way that I am viewing this is it's possible this could still go higher. Now, when we look at the 10-year yield, which is further out on the curve, this guy is kind of also undecisive. We had a massive move up 2020 all the way into 2022. In October of 2022, this is the bottom of the gold market. The bottom of the gold market's when yields started to go downward. And I think the market is discounting this to go lower. But what this kind of looks like is a big flag pattern. There's your flag. It's just flapping in the wind. And this still can go up. But again, we're in this indecisive on top of support pattern. So I still think it has a likelihood of going higher. We are on top of support. There it is on top of support, and this could easily work its way on up. So when we look at this, short end at like the 2-year higher, potentially. The 10-year doesn't look too bad to go higher. And the 30-year, if you look way out on the end of the curve, and we look at this is broken out, definitely broken to the upside here. That's a breakout to the upside, and then you zoom in, and this is a breakout to the upside as well. Consolidation, breakout, and it still looks good to roll higher if it wants to. So higher yields could very well be a possibility, but higher yields generally means more inflation. And more inflation generally means higher oil prices. And those are all interconnected. Oil price is the translator of money in the system into the consumer price index. We've seen the M2 money supply decline, and we've seen velocity kick up. We've got a very tough read here in the short term. So if I were to make an educated guess based off these charts, I would say yields are probably going to go higher. That's what my guess is. And I think it has to because of the strength in the housing market. And if yields were to fall, I think inflation would come right on back, and the housing market would basically would kick into gear to the upside. So I think rates have to stay high and potentially could go higher. The TYX TNX ratio is still, I mean, we had a nice move here. And remember, we bottomed in about September, October for the gold market. The gold market likes when this thing goes higher. So we were coming on up. Gold started to take off. We were coming up. Gold's taking off. And gold said, oh, well, let's pull back. What's going on here? So when the yield curve inverts, gold doesn't like that. We're inverting right now. And right now, in the short term, I don't think if there's a clear path of rates either going higher or lower. But in the 1970s, gold took off to the upside even when rates were inverting. So that's where we're at with rates. And I do think this could invert further, which it won't impact oil. But when oil starts getting kicked up, people are going to say, whoa, we positioned wrong. The inflation's a bigger deal than an actual recession. And that yields are going to go higher and bonds are going to be sold off. But we'll see. Again, we'll see. Bond prices up a little bit today. We're still below this resistance line, and they have been taken to the woodshed and just sold nonstop. When you look at these big trends, you generally see this entire pattern there. That's generally an end of trend move. I think that probably is an end of trend move, and we are going into a lowering bond price environment, higher yields. And what I'm debating here is, are we going to get a retest and then roll back over? Is that, and it's a possibility, and I'm not sure if we're going to get it or not. We'll have to wait and see. If we do, we'll have a slowdown in the markets. Precious metals take off. Oil and maybe some of these inflation-sensitive assets will go sideways for a little while, consolidate longer, and then when this kind of comes up and does its full retracement, this is where oil and everything will just rocket. That'll be the end of your wave 2 potentially. But again, I'm speculating here. I don't know the path. That's why I'm remaining long, and I'm not going to try to time the short term. Gold, basically sideways. So we had that 2-year yields up, dollar slightly higher, and what you'd expect is a sideways motion. So when yields go up, gold's been pulling back and consolidating. And a lot of people think that yields are going to pull back. We're going to get that pullback and gold's just going to run. I think that's a high possibility. It is a high possibility. I just don't see clearly which direction those yields are going in the short term. Silver, it's going to do whatever gold does, but this still looks good to go higher. There's no big selling pressure. We've got some good buying pressure. Still, to me, looks like we're ready to rip on up. Platinum, it kind of gapped up here on the, it's not the daily. It did gapped up on the daily here. We're right underneath this kind of shorter term resistance, but long term, yeah, this thing looks great to go higher. XAU to gold ratio firming up a little bit. Again, I want to break through this downtrend line. That's what I'm looking for. We're all looking for that. And it looks good to continue higher if it wants to move on up. It looks very good here. CRB index, that does look like we could go sideways to slightly lower. We are contracting in these opening and closing prices here, and that generally indicates that we could roll over to the downside. We have the CRB to S&P 500 just moving sideways here, but overall, big picture, it's just been leaking off a little bit. And it could leak off further. If we get that lowering of interest rates, I do think that this could even come back further. It's possible. GDX still looks good to roll on up. We've got the 2 big candlesticks, not much selling pressure. You're getting that type of movement that I like to see. GDX has the same thing, higher. SILJ, same thing, higher in the short term. And we'll see how sustaining that move is. Crude oil slightly lower, but we've got a wick at the bottom. So it's hanging in there. It's right on support, and it's hanging in there. We've got tons of support underneath us. That's what these big wicks are on the bottom. So we have buying pressure underneath us. And on a bigger picture view, I think this is a retest for a potential move to the upside, especially on logarithmic because it hits that. So again, we'll see which direction yields go. And yields moving lower doesn't mean crude oil can't move higher. It just means that the money flows prefer precious metals and some different assets when yields go back down and the curve uninverts. It's more of a fear trade. Natural gas up a little bit, but still just moving sideways. It's still basing out. XOP, yeah, you know me, actually did quite well today, surprisingly. So this was a reversal candlestick yesterday. The momentum was down, and we can show that in the 5-day candlestick. So the momentum was down this day. We gapped lower. Buying pressure shot this thing back up. The buyers showed up. So the momentum carried it. It gapped down in the morning. Buyers came in and pushed this thing higher. We got a nice little pattern there that's broken to the upside. So the momentum is to the upside for oil, or XOP, sorry, XOP. So XOP actually looks really good, and it was bought up today. And this actually looks like it's going to try to break out of that pattern here soon. OIH also moving higher and has reversed that downward momentum. This was yesterday, the downward momentum. It gapped lower, bought back up. And we're coming back higher there in that pattern. So that's looking good for a potential move to try to move higher. The Sprott Physical Uranium Trust down a little bit, but this doesn't look like a bad candlestick. The sellers tried to sell it off. Here's the 5-day. They tried selling it off. Buyers came in and pushed it back up. Momentum's to the upside. That's what that wick on the bottom is showing us. So I do think that this could try to move to the upside here and try to break that 1815 level. That is important to break, that key level. URNM also looking quite solid for a potential move higher in the short term. Let's see if we can get some legs underneath us. Now, what's important here? We want to start taking out some of these guys here. Like we want to take out and create a newer high. So we're down here, and what we've done is we've had lower highs each time, right? What we want to do is we want to break that trend. We want to break that trend, get up here, create a higher high, and break that trend and move on up. So we've broken the first trend line. The first trend line is this trend line here. We've broken that, and now we want to break one of these highs at like $38. We want to get above 38 bucks. URNJ also looking quite good. They tried selling it off. Here's the sell-off attempt, all right? So there's the sell-off attempt, and then it just rallied back up. So the momentum's actually going to the upside here in the very short term. That's what that wick on the bottom of today's candlestick is. Momentum's coming to the upside. We'll see if that momentum can push us upward. Fingers crossed, guys. Here we go. This is going to be it. And you've got a little bit of a resistance line kind of coming through here. So we'll see if we can break that guy. TAN down a little bit, but still looks good to try to move higher. And why do I think that? This is a bullish engulfing candlestick, engulfing all these ones before it. We've got no selling pressure over here. That looks like to me that we could potentially move higher. We've got COPX. That's putting in a bullish engulfing. That looks like it wants to move higher. Lithium, bullish engulfing right up there, higher. So let's see if we can break out of these patterns to the upside. REMX doing the same thing. It's doing a little bit of a turtle head out on a bullish engulfing pattern that looks like it wants to accelerate to the upside. Momentum is good to the upside. S&P 500, momentum to the upside. It looks good to move higher. NASDAQ, another higher. Bullish engulfing, looking good to move on up until I see a reversal candlestick. Emerging markets, higher, 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 higher on all these. So they're looking good. XHB ripping it. Wait a minute. Aren't we supposed to be in a housing market crash? Then why are home builders about to rip it to the upside? Because they are wrong. They are wrong. Obviously, these guys, I don't know what they're looking at, but there's no inventory. Wrong, wrong, wrong. Moo. Moo looks like it's moving higher. Bullish engulfing. Higher, higher, higher. Copper. Now, copper's up against resistance. I'm not going to say higher here. We can see that the candlesticks are starting to contract a little bit. It's not, all that's saying is that the momentum, if we were to look at a 5-day, what it's going to do, if you look kind of this, the momentum is slowing here. And what we're doing is we're putting in a pattern that we're going to have to break. But it does look good that it could potentially go, yes, higher. Iron ore putting in a base here, so that looks good. It's trying to base out on a falling wedge. Higher over time. Nickel slightly lower today, but again, it looks like it's trying to base out, do something. Aluminum slightly lower. Again, a little bit of selling pressure momentum here to the downside. But I do think aluminum's got a very positive future. Baltic Dry Index moving on up a little bit today, and we'll see if that can continue. We've got Newcastle coal up quite a bit. I do think we're going to start to get support general area of where we're at. So we're going to start to see some trampoline jumps going back and forth. And then we've got Ethereum also looking good to move higher. Why do I think that? Well, we've got a lot of buyers coming in here. The overall markets look good, and we're sitting on top of a bunch of support. So I think that still looks good. Same with Bitcoin, still looks good to try to move on higher. And that's what I'm seeing in these markets. We're above support. So that's what I'm seeing across the board there. That is my opinions on the short term. I am not trading the short term. What I'm doing is I'm accumulating assets when they're cheap, and then I'm just going to sit and hold. Very much like a Buffett approach. And what I'm doing is I'm watching the market conditions. I'm making sure that house prices, not prices, but the volume of new homes being sold remains at an elevated level above normal, and that there's a deficit in the housing market, that we have low inventory. Why is that so important? Because it prices these assets. It changes the interest rates. That is everything. You could throw away all of this technical analysis on the individual sectors and start looking at yields, really dive into yields, yield curve, how this is moving. And if you look before that, which is the leading indicator, in my opinion, what it is, the leading indicator is the housing market and the demographic. The demographic ultimately drives the housing market, which ultimately drives inflation, which ultimately drives interest rates. And interest rates is the driver in the pricing of all assets in the market. It determines money flows. That is the key in the back of the book. And as long as the pressure is in that demographic, putting pressure in the housing market to go higher, and I'm not talking about prices, I'm talking about the volume of loans in the system to go higher, not the price. Price doesn't matter. The volume of home loans, the volume of those loans, if they're remaining elevated, that is an inflationary pressure, which will put pressure on yields to go higher. That all falls apart when the housing market or demographic goes away. When that goes away, then you get a crash, you get a deleveraging event. And that's what I look at. As long as that pressure's there, the assets in commodities generally go higher. We have a big shortage in the housing market, at least from the data that I look at. I know people disagree with it. Go ahead, disagree with that shortage. But you know what? You have zero data supporting you. If there was no shortage, then tell me why there's a shortage of inventory. It's that simple, guys. You're basically saying that 1 + 1 doesn't equal 2. So you can debate where the inventory levels could go in the future, and that is perfectly fine, but you can't debate where the inventory levels are today. You cannot claim that you have a housing crisis with, on a housing bubble, I should say. You can't have a housing bubble with no inventory. That is contradictory. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. You can see the companies that I am positioned in, and you can see what I am doing. So that's what I've got for today. We'll catch you next time. This is Finding Value.